Do you think it is a good time to buy Tesla stock now? As Tesla stock has been experiencing extreme fluctuation, whether a upward or downward spiral, people have been becoming concerned as to where it will really be in the next years. Make sure to stay tuned and keep watching to find out whether it is time to buy Tesla stock or not. Tesla stock has recently gone down to around $650, but is currently sitting at $725.60. Despite the rise, investors are concerned that the stock may once again experience a dip in the next quarters. Unaffected by this, Tesla bull Cathie Wood even advises investors to buy Tesla stock along with her. She, along with other bulls, remains bullish on Tesla stock. Their faith that Tesla will continue to perform well in the future remains. In today's video, you will find out if it is a good time to buy Tesla stock now. Tesla stock, along with other stocks in the market, had been experiencing a downward spiral trend due to today's current economy. Today's economy has been weighed down by a lot of factors, including the COVID-19 endemic and the Russia-Ukraine war. Because of this, investors and investing enthusiasts have been wondering whether it is a good time to invest their hard-earned money or not yet. An article stated that Tesla stock's valuation is getting closer to reasonable levels, but it may not stay there for long. Since Elon Musk, Tesla's CEO, announced his plans of buying Twitter, the company's stock has been on a volatile downhill ride. Still, in terms of vehicle production, Tesla has been full of great news in recent reports. Q1 production rose 69% year over year, which drove automotive revenue growth by 87% year over year. Because revenue grew faster than production, Tesla is generating better margins on every vehicle it produces. This margin increase comes in part from price hikes instituted throughout 2021 and increases in its production efficiency for its Model S and X, which are higher-priced vehicles. This revenue growth is trickling down to the bottom line, as quarterly net income rose 658% year over year. Even more impressive was Tesla's 17.7% net income margin, placing it among the best in the auto industry. Tesla is nearing luxury vehicle margins. In fact, the management gave the investors a great piece of news. According to them, they expect to grow their vehicle deliveries by 50% annually over multiple years. Using this forecast to model revenue growth and keep Tesla's 17.7% profit margin, Tesla could have $14.9 billion in earnings at the end of 2022. This means Tesla trades for 49.5 times full year 2022 earnings. Not a bad valuation for a company that expects to grow around 50% annually over the next few years. With a lot of issues Tesla has been experiencing, with investors deciding to sell off their stocks, the company is continuously rising while rapidly expanding its business on all fronts, and has strengthened its balance sheet and cash generation in the process. During numerous COVID-19 related shutdowns at Tesla's Shanghai factory, investors weren't sure what to expect, but Tesla delivered even more than they expected. The company's $18.8 billion in total sales, which climbed 81% year over year, beat Wall Street expectations by $918 million. Likewise, its non-GAAP earnings per share of $3.22 equal to 246% growth, crushed consensus estimates by a whopping 42%. To top off a record quarter, the company grew total production and vehicle deliveries by a respective 69% and 68%, producing 305,407 vehicles and delivering 310,048. Per management's guidance, investors can expect the company to achieve 50% average annual growth in deliveries over a multi-year time horizon. In fiscal 2022, analysts are modeling a top line and adjusted bottom line of $86.5 billion and $12.32 a share, translating to robust year-over-year ascents of 61% and 82% respectively. In addition to these spectacular developments and achievements, the company's balance sheet and cash generation are equally thriving. In its latest quarter, Tesla revealed that total debt, excluding vehicle and energy product financing, fell below $100 million. The company is manifesting the cash is king mantra as well, whereas in the first quarter, free cash flow surged an astonishing 660% to $2.2 billion. Provided that the global EV market is projected to expand at a compound annual growth rate of 25% through 2028 to nearly $1 trillion, it could be said with exceedingly high confidence that Tesla is poised for more success in the coming years. Tesla, TSLA, reported that it delivered 310,048 vehicles in the first quarter, up 68% from the year-earlier period and just below analyst estimates of 312,000. As previously mentioned, analysts were expecting a lower number, as recent COVID shutdowns in China had shuttered Tesla's Shanghai electric vehicle plant. That created massive logistics complications delivering units to customers in Europe. Wedbush analyst Dan Ives said in a note to clients, "Would you invest your hard-earned money in Tesla stocks today? Let us know what you think by sharing your thoughts in the comment section below." According to the IBD, or Investors Business Daily stock checkup tool, Tesla stock has an IBD composite rating of 95 out of 99. Investors Business Daily is an American newspaper and website covering the stock market, international business, finance, and economics. According to them, when choosing growth stocks for the biggest potential gains based on the CAN-SLIM investment paradigm, focus on those with a composite rating of 90 or higher. The stock also has a relative strength rating of 87 out of 99, which means that Tesla stock has outperformed 87% of all stocks in the IBD database over the past 12 months. Moreover, its accumulation distribution rating is C. That rating analyzes price and volume changes in stocks over the past 13 weeks of trading. A grade of A signals heavy institutional buying, while the lowest rating of E means heavy selling. Think of the C grade as neutral. Tesla's rise has been nothing short of phenomenal. It's hard to believe that in 2012, revenues hadn't even crossed the $1 billion mark. Revenues have soared, and 2021 saw a 71% increase over 2020. Q1 2022 was even more impressive, with total sales growth of 81% year-over-year. Margins are increasing as the company scales, which is a terrific sign of profits to come. The increase in margins means that Tesla is not sacrificing profits for growth. The question is, should you go ahead and buy Tesla stock today? It is recommended to consider these 3 questions and their corresponding answers before making a decision. First, will Twitter and other distractions hurt Tesla stock? It was earlier mentioned that Musk's stake on Twitter made some investors nervous, and some even wondered if the CEO shifted his focus on a different venture altogether away from Tesla. 2. Will inflation outweigh increased demand from rising gas prices? Gas prices contribute massively to the increased cost being felt by consumers. Even though high gas prices could spur people toward electric vehicles, rising costs economy-wide, including gas, could hurt consumers' ability to afford new cars. Lastly, will competition eat into Tesla's competitive advantage? Although Tesla is known to be the leading manufacturer in the electric vehicle market, numerous automakers are well on their way to following Tesla's tracks. If you are thinking of buying Tesla stock, you better be prepared, since there are known wild up and down share price swings which are a hallmark of the stock's performance. These are the few things you need to take note of. 1. Make sure you have a brokerage account. In general, you'll want a brokerage account with no trading commissions, useful trading tools, and no account or inactivity fees. Note that if you're buying Tesla shares for retirement because you believe in the company's long-term potential, a Roth IRA could be a good parking spot. That's because qualified withdrawals from a Roth are tax-free, so you won't be responsible for paying Uncle Sam for investment gains, like with a traditional IRA, which could be substantial with a potentially fast-growing company like Tesla. 2. Research Tesla's fundamentals. Make sure that you know what you're really getting into. Remember, you're purchasing a small portion of an actual business. Tesla's balance sheet, income statement, competition, and management will help you give the company a good once-over. 3. Decide whether you should buy Tesla stock. 4. Set a budget for your Tesla stock purchase. This is particularly dictated by how much money you have to invest. Experts suggest aiming for 3 to 6 months' worth of expenses, though even $500 to $1,000 is a good start. It's wise to also consider when you'll need the money you plan to invest in Tesla. Generally speaking, stock market investments should have a time frame of 5 years or more, meaning you should be thinking of Tesla as a long-term investment and only investing money you won't need in the near future. Finally, decide when to buy Tesla stock. You have several options. You can buy Tesla stock right now, buy Tesla stock at a specific share price, or buy Tesla stock systematically over time. Some may even wonder how Tesla has such a high profit margin compared to legacy automakers. For one, Tesla sells directly to consumers, so it doesn't need to share profits with dealers. Also, it is solely focused on electric vehicles or EVs. Watch our other videos to learn more about Tesla stock.